This is Richard Flax at Moneyfarm with our regular monthly update. April was a difficult month in financial markets. The crisis in Ukraine continues to dominate the news and shows few signs of abating. On the economic side, the combination of high inflation and weakening growth is a challenge for households, policymakers and investors. All of this is well known. The question we continue to debate is, will we see an improvement from here or further weakness? We've been focusing on three important areas: policy, macroeconomics and financial markets. First, on policy. For central bankers, inflation looks like the top priority. In the US, we saw the Fed raise rates by 50 basis points, while in the UK, the majority voted in favour of 25, but 3 of the 9 members of the MPC favoured a 50 basis point increase. Having been slow to take action, central bankers now seem ready to tighten quite quickly, even as we see signs that the demand is already weakening. It's a delicate balancing act, but the message from the Fed and the Bank of England seems to be that the risk of a recession is an acceptable price to pay to bring down inflation. Turning to the macro environment, the short-term situation is quite tricky. In developed markets, we've seen growth expectations come down, while inflation estimates have risen. In China, the aggressive policy against COVID has brought a sharp slowdown to growth and is likely to have an impact on global supply chains in the coming weeks and months. At the same time, we are seeing demand weaken. Inventories in some places are rising and consumer sentiment is worsening. The good news here is that for now, the labour market remains pretty solid. Unemployment is low and job openings remain relatively high. Finally, let's think about financial markets. In a difficult environment, we do see some cause for cautious optimism. First, valuations have clearly improved. In equities, that's particularly true outside some of the very big US large cap names. In bonds, we've seen US 10-year yields go above 3%, albeit briefly. But the underlying environment, in terms of valuations, is much better than it was 6 months ago. Second, corporate earnings have remained pretty resilient. We'd expect to see some earnings downgrades over the coming months, but the overall corporate profitability still looks pretty good. So where does this get us? We're mindful that financial markets are usually forward-looking. If we wait to see all the evidence, the price will typically have moved already. Particularly in a difficult environment, it's important to try and focus on the medium to long-term outlook. Could we begin to see some improvements over the coming months? We think we will, even if the path to get there is likely to be a bit bumpy. Thank you very much for joining us, and look forward to speaking again soon.